So the next topic, credit management. In SAP sales and distribution module, credit management refers to the process of managing and controlling credit limits for customers to ensure timely payments and minimize the risk of bad debt. The primary objective of credit management in SAP sales and distribution is to assess the credit worthiness of customers, define credit limits, monitor credit exposure, and enforce credit control measures to mitigate the financial risk. So, for example, the company HP selling the laptop with the different companies like a Tata Groups, Reliance Group, Maruti, Birla Groups, and Hyundai. These are all the customers for HP. The HP fixing the credit limit. For example, Tata Group 1 million INR, Reliance Group 1.9 million, Maruti 1.5 million, Birla 1.4 million, Hyundai 1.2 million INR, for example. So based on the different type of calculations, they can fix the credit limit for each and every customer based on the trustworthiness and the risk factors. The SAP SD modules credit management features and essential elements are as follow. There are 6 elements. One is credit check. What is meant by credit check? SAP SD allows businesses to perform credit checks on customers during the sales order creation process. The system checks whether the customer's credit exposure exceeds the defined credit limit before approving the order. This helps prevent a sales order from being processed for customers who have exceeded their credit limits. In sales order, there is a checkpoint. Once the credit limit exceed, system will block the sales order. Number 2, credit limit management. Businesses can define credit limits for customers based on various criteria such as credit rating, payment history, and financial stability, and etc. Credit limits can be set at the customer level, sales area level, or even product level. SAP SD allows for the configuration of automatic credit limit updates and adjustments based on the predefined rule and conditions. Number 3, credit exposure analysis. SAP SD provides reporting and analysis tools to monitor credit exposure across customers, sales areas, and time periods. Businesses can track credit utilization, outstanding receivables, and credit exposure trends to identify potential risk and take proactive measures to mitigate them. Number 4, credit block and release. SAP SD allows businesses to place sales order on credit hold or block shipments for customers who have exceeded their credit limits or having outstanding overdue payments. Authorized users can manually release blocked orders once the credit issues are resolved or approved by the credit department. Step number 5, credit management integration. Credit management in SAP SD is tightly integrated with other modules such as accounts receivable, financial accounting, and controlling. This integration ensures seamless communication and data exchange between credit management process and financial accounting systems, enabling accurate reporting and reconciliation of customer receivables. Step number 6, credit scoring and risk assessment. Some businesses may implement credit scoring models and risk assessment algorithms within the SAP SD module to evaluate the credit worthiness of customers more effectively. These models may consider factors such as credit history, payment behavior, industry risk, and economic indicators to assign credit scores and determine appropriate credit limits. Overall, the credit management in the SAP SD modules plays a critical role in optimizing cash flow, reducing bad debt losses, and maintaining healthy customer relationship by ensuring that sales transactions are conducted within acceptable credit terms and limits. So the next one, Types of credit management in a SAP sales and distribution module. There are two types. One is simple credit management, another one is automatic credit management. Under the automatic credit management, there are two types: static credit management and dynamic credit management. So we will explore one by one. So I can start with simple credit management. For example, the HP fixing the credit limit for Tata Motors 500k INR, which means 5 lakh rupee. So in SD sales and distribution module, the first order has been created for 100k on March 5. The delivery document has been created for the order on March 8, and March 9 invoice has been created, and the same day FI accounting will be posted. So then the second order on March 6, 200k has been created, and the March 7 delivery has been created for 200k order on March 7. So in this line item, what is the total value? So here the formula is simple credit management equal to current order value plus open item value equal to credit limit. So the credit limit is 500k INR, and the first line item which we created order on March 5 and delivery will be March 8. So there is a 100k open items. In second line item they creating 200k order on March 6. To 200 plus 100 total value is 300. Then system allow to process further because our credit limit is 500k. Then the third order, order 3, created for 400k on March 9. So my question, whether this order going to be blocked or not. So here before order 200k, March 8 the sales document has been created, invoice has been created. The March 10 only the open item will be cleared. So before March 9 I am creating the order number 3 400k. Then 400 plus 200, the total value is 600k. Our target is only 500k. System won't allow to proceed for this order. System will block this order. And if you are creating one more order on March 10, obviously system will block the fourth order also. So this is called simple credit management. Current order value plus open item value equal to credit limit. So then go to second method, static credit management. The same credit limit 500k INR. The first order will be created on March 1. So before that, the formula for static credit management: current order plus open delivery plus open invoice plus open item value equal to credit limit. Before, here only current order value plus open item value, which means system will not consider the delivery and the invoice. Okay, so as per order 3, system will allow to create the sales order because we have only 400k. The open item will be updated on March 10 only. So then the fourth order system won't allow because fourth order created on March 10, but here March 11 only the open item will be posted. So already I have 200k on open item March 10. Then 200 plus 400 system won't allow to create this order. System will block this particular transactions, fourth transaction. So in static credit management, current order plus open order. Current order means what order we are creating now. What is the value for order creations? The creating order, live order plus open order. What are all the order available in open? And open delivery plus open invoice plus open item value equal to credit limit. So example, the same 500k target limit. March 1 the order 100k created, and March 5 only goes to delivery creation. So here what is meant by open order? Open order means order not yet delivered it. So this order up to March 5, this is open order, order number 1. March 1 created, but up to March 5 creating the delivery document. This is the open order. Open delivery means delivery not PGI yet. So which means the picking is not completed. Post goods issue is not completed. So until that, the particular document coming under open delivery. Then open invoice. Invoice not posted to accounting yet. So those kind of document coming under open invoice. So as per first document, March 1 order has been created. Up to March 5, this is the open order. Second line item, March 6, order number 2 has been created, 200k plus 200 plus 100, total value is 300k. So then this order number 2, March 10 will be delivered and March 11 will be invoiced, and the same day open item will be created. The same day, March 11, the accounting will be released. So here March 9, the order 3 has been created for 200k. So as per March 9, here before order 200k, it is waiting at the open delivery level. And the next order, order 4 March 10, order 5 March 11, 3 order has been created. But here the delivery date is June 10, July 10, August 10. So which means more than 3 months. Around 3 months or more than 3 months. So it is not coming under practical thing. So the next order 6 has been released for 100k on March 12, and it goes to March 13 for delivery creation. So whether this 3 document has been considered or not in static credit management. In static credit management, this 3 entry will be considered. It will be calculated for credit limit. Okay. So and the next one is dynamic credit management. So normally we used to call this dynamic credit horizon, which means open order and a delivery beyond certain time limit, like a 2 to 3 months or more, will not consider. Which means the order 3, 4, 5 will not consider, because this is more than 2 to 3 months beyond delivery date. So system will consider order number 2 and straight away order number 6. So in that case, system will allow order number 6 100k on March 12, because in March 1 we have 100k, March 6 I have 200k, 200 plus 100 totally 300. On March 12 I am creating only 100k order, so 300 plus 100 total value is only 400. So then system will allow to create the order. So the formula everything is similar, but here the only one condition will differ. In static credit management, before step, system will consider this 2 to 3 months beyond delivery order. But in dynamic, this order will not consider. Order number 3, 4, 5 will not consider in dynamic, because the nature of dynamic credit management is system don't consider more than 2 to 3 months beyond delivery date. Those kind of order system will not consider. So that's why the order number 6 will allow, because it is coming under credit limit, the target credit limit 500k. So it's look like a confusion. So I'm going to write a detailed explanation, so line by line by words, and I'm going to upload the document in Udemy in the same chapter credit management. You can go through one by one slowly. I will try to explain by theoretically line by line. Sometimes few people they can understand once you read slowly, they can understand the difference between simple, static and dynamic credit management natures. Under the credit management configuration, there are 14 steps. Step number 1, define credit control area. So first we need to understand what is meant by credit control area. So under the enterprise structure, the credit control area has been created. The credit control area is the entity to fix each customer credit limit in a particular company code. This credit control area created and linked with the company code as well as sales organization. You can use the single credit control area for multiple company codes. For example, I am creating one credit control area and I am going to assign with company code 1 and company code 2 in the same group of industry. So the first company code available in India and the second company code available in US. So the first company code in India and the second company code in USA. Both company code total credit limit value is 500k INR. If both company code credit limit is same, then we can use the same credit control area to both company codes. Or one company code is 200k and second company code is 400k. There are different credit limits. Then we need to create one credit control area for company code 1 and another credit control area for company code 2. But you can use only one credit control area for one company code. You cannot create more than one credit control area for the same company code. But you can assign the same credit control area with multiple company codes based on the credit limits. So now we can go to SAP to create the credit control area. /n SPRO, enter SAP reference IMG, enterprise structure, definition, financial accounting, define credit control area, execute, select new entries, enter credit control area, 4-digit ID, TTCA. So then the currency, INR, update. There are 4 options in update. So based on the requirement, we can use no update from SD documents. If you keep it as empty, then which means there is no update for SD documents. If you are selecting 4012, open order value, on time access, delivery and billing document value. If you are using 4015, open delivery and billing document value. If you are using 4018, open delivery value for sales order, open billing document value. I am going to select 4012, open order value, on time access, delivery and billing document value. So then here we need to select FY variant. FY is nothing but fiscal year variant. So first we need to check what fiscal year variant which we used in our company code. While copying the standard company code, you can get the fiscal year variant, chart of accounts, everything. So this fiscal year variant in real time created by finance consultant. So go to parallel screen, SPRO, SAP reference IMG, financial accounting global settings, global parameters for company code, enter global parameter, execute. Here we can select position, enter the company code TT06, then continue. Double click on Tata Motors Limited TT06. So here the fiscal year variant is K4. So then go to back, go to parallel screen. Here you can enter the fiscal year variant K4. So then credit limit, I'm not going to enter the credit limit. So based on the customer requirement, client requirement, we can fix the credit limit. So under the organizational data, you can select all company code options. If you are using the same credit control area for multiple company code in the same group of industry, or you can create each company code one credit control area, save, continue. The data was saved. The credit control area has been created. Go to one step back. Here we can enter the descriptions for TTCA, credit control area, TT06, our company code for reference. Save the data. So then go to back. So now the credit control area has been created. we need to assign this credit control area to our company code. So under the enterprise structure, go to assignment, then financial accounting, assign credit control area to company code, execute, select position. So here we can enter the company code TT06, continue. So here you can select our credit control area which we created now, TTCA, then save the data. So then go to back. So in the credit management configuration, first step we created credit control area. Second step we assigned with our company code. Step number 3, assign sales area to credit control area. Go to SAP /n SPRO, enter SAP reference IMG, go to financial accounting, go to financial supply chain management for credit management configuration. So here go to credit management. Under the credit management, integration with accounts receivables, accounting and sales and distribution. Integration with the sales and distribution. Assign sales area to credit control area. Execute. Select position. Enter the sales organization TTS1 and the distribution channel T0, division T6. Continue. So against our sales area, here we can enter the credit control area which we created, TTCA, save and then continue. So the data was saved, then go to back. Now the sales area and credit control area both are assigned. Fourth one, assign credit price in pricing procedure. We already configured pricing procedure. While configuring credit management, you must ensure the pricing techniques and the pricing procedure has been created or not. So here we can enter /n v/08, enter. So change view in pricing procedure, select position, enter our pricing procedure TTPP. So then continue, select the row, double click on procedures control data. So here in the net value, here we need to select the subtotal A for credit price. If you are selecting subtotal A in net value, then only system allow credit price in the customer while creating the sales order. So then save the data, continue. So now the credit price linked with our pricing procedure. Go to back. Step number 5, activate credit management. Go to SAP /n SPRO, enter SAP reference IMG, financial supply chain management, credit management, integration with accounts receivable accounting and sales and distribution, integration with the sales and distribution, deactivate SAP credit management, execute. So if you select tick mark, then the credit management will be deactivated. If you don't put tick mark, then the credit management will be activated automatically. So ensure there is no tick mark, which means the credit management is active. Save the data. So then go to back. Step number 6 in the configuration, define credit segment. So first we need to understand what is credit segment. Credit segment we used to get the summary of report or cumulative of report. For example, in our company, there are 3 different products we are manufacturing and selling to companies: steering assembly, brakes assembly and suspension assembly. This is our final product. So we are selling the steering assembly to 3 different customers. Maybe the customer 1 maybe Hyundai, customer 2 Ford, customer 3 Maruti. So we are selling the steering assembly with 3 different customers. Each and every customer having their own credit limit. or you can fix the common credit limit based on the credit segment, which means for steering assembly you can fix the common credit limit for all the customers. Same goes for brakes assembly and suspension assembly. So this is called credit segment. It is for reporting purpose, grouping the customer for the particular target value. Now we can go to SAP to create the credit segment. Define credit segment. The same navigation up to integration with the sales and distribution. So then execute. Here you can select new entries or copy any one existing entry. Select the row 1000, then copy yes and enter the credit segment 4-digit ID, credit segment 1. So here I am going to enter as we discussed. Starting assembly is one of the credit segment. Enter. Just a warning, select a key from the allowed namespace. Press enter again. So then save the data. Continue. So now the credit segment has been created, TTCS1. This is our credit segment. I am creating only one credit segment for sample. In real time, based on the client requirement, we can create multiple credit segments. So then go to back. The seventh one, assign credit control area to credit segment. Step number 7, go to SAP. The same navigation, integration with the sales and distribution. So here the next one, assign credit control area and credit segment. Execute. Select position, enter TTCA, enter. Against our credit control area, we can assign the credit segment which we created now. So here we don't have our credit segment. So let me check. Go to financial supply chain management, then go to credit management. Here you can select credit risk monitoring, then master data, create credit segment. Here we can enter. So here we need to create the credit segment. Select new entries. So copy the existing one and enter the credit segment 4-digit ID. So then reference for company code TT06, currency INR, exchange rate type M is standard. So then enter, save the data, continue. So then go to back. So now go to assign credit control area and credit segment. Execute. Select position, enter TTCA, credit control area. Here we can select the credit segment which we created now. See here TTCS. So then save the data, continue. So now the credit segment assigned with our credit control area TTCA. So then go to back. Step number 8, create risk class. Go to SAP. Under the financial supply chain management, go to credit management, then credit risk monitoring, master data. So here you can create risk classes. Execute. So here I am going to create 3 different risk classes. We can use existing one or we can create our new risk classes. So let's say I am going to select low risk, medium risk, high risk. So copy yes. So here you can enter risk class. I am going to enter TT1, TT2, TT3. So high risk, medium risk and low risk. So here we can name it our company code TT06 for reference. So then here we can enter the score from number and to number. Enter. So then save the data. Continue. So now we created 3 risk class: low risk, medium risk and high risk. And we are giving the scoring from number and to number. So then go to back. So the next one, step number 9, define credit groups. So first we need to understand what is meant by credit groups. In order to manage credit, a credit group classifies clients, enabling customized credit checks and procedures according to particular traits or corporate requirements. The purpose of credit groups categorization, you can group customers using credit groups according to a number of factors including industry sector, risk level or geographic locations and etc. And tailored credit checks. You can configure different credit checks and processes for each credit group, ensuring that the system handles credit limits and risk assessments appropriately for each customer segment. Third one, reporting and analysis. Credit groups facilitate the generation of reports and statistical analysis, allowing you to monitor credit performance and identify the potential risk. Fourth one, credit holds. Credit groups can be used to select credit holds for processing and to generate reports for statistical analysis. So this is about the credit groups. We can create our own credit group. Go to SAP. Under the financial supply chain management, go to integration with accounts receivable, accounting and sales and distribution. Integration with the sales and distribution. So here you can define credit groups, execute. We can create multiple credit groups based on the requirement, or you can use existing standard settings. So here credit group for sales order, credit group for delivery, credit group for goods issue. So I'm going to use this 3 line item, the standard one, as my credit groups 01, 02, 03, or you can create your own group with a different name. Anyway, I'm going to use the standard 01, 02, 03. First block at my order level, second block at my delivery level, third block at my PGI confirmations, post goods issue level. So go to back. Step number 10, assign sales document and delivery documents. Go to SAP. The same navigation up to integration with the sales and distribution. Then the topic name, assign sales document and delivery documents. Execute. There are 2 line items, set credit limit checks for sales document types. First we need to set up the credit limit check for sales document type. Select position, SAP sales document type. The standard document type is OR. Continue. So here I'm going to enter the credit check D. So there are 4 different levels of credit check. Empty means no credit limit check. A means run simple credit limit check and warning message. We discussed in theoretically what is simple, dynamic and the static credit management. B means run simple credit limit check and error message. C means run simple credit limit check and delivery block. D means credit management, automatic credit control. I'm going to enter D. D means automatic credit control. So then here you can select the credit group 01, credit group for sales order. We are blocking the sales order level. That's why I'm selecting 01. Then save the data. So data was saved. Go to back. Second line item, set credit limit checks for delivery types. Double click. Select position. The delivery type, SAP standard delivery type is LF, outbound delivery. Continue. So against LF, delivery credit group is 02. 02 means credit group for delivery, and GI credit group 03, which is nothing but credit group for goods issue. So then save the data. So now we set credit limit checks for sales document type and delivery types. Step number 11, define risk category. Go to SAP. First we need to understand what is meant by risk category. A risk category is a classification used in credit management to determine the level of credit risk associated with a customer, influencing credit checks and controls during the sales order processing. Risk categories help businesses assess and manage the financial risk of extending credit to customers. So there are three different levels: low risk, medium risk, high risk. So here we can take example. Low risk means customers with a good payment record and a strong credit history might be assigned a low risk category, potentially leading to automatic credit checks or minimal controls. And the high risk customers with a history of late payments or a poor credit rating might be assigned a high risk category, resulting in more stringent credit checks and potential order blocks. So the in between two line items, low risk and high risk, we can create one more line items, medium risk. So medium risk means customer with a good payment record, but still there are few transactions, few incidents went wrong. So those kind of customers we can keep it as a medium risk category. So then go to SAP, define the risk category: low risk, medium risk and high risk. Up to integration with the sales and distribution, the same navigation. So then the topic name, define risk category, execute, select new entries, enter risk category A and the credit control area TTCA. So high risk, then B, TTCA, medium risk, C, TTCA, low risk. So then save the data, continue. So now we created risk category. So then go to back. Step number 11, determine active receivables per item category. Go to SAP, determine active receivables for item category, execute, select position, enter the item category TAN. The TAN is item category for sales document. So here against TAN, the credit active has been selected. So then save the data, go to back. In configuration, step number 13, define automatic credit control. Go to SAP. So up to integration with the sales and distribution, the same navigation, define automatic credit control, execute, select new entries. Here we can enter the credit control area TTCA. So then select the risk category which we created, A, high risk, and select credit group 01, sales order, high risk TT06, select item check. So here in SAP credit management, select A, warning, and select status block, tick mark. So then save the data, continue, go to back. So once you save the data, the currency will be changed from euro to INR automatically. Sometimes you can give the deviation in percentage. We can give 10% deviation. Once the credit limit is reached, then system won't allow to create the order. System will block at order level. So in the time you can give 10% or 5% deviation, or you can give 1 or 2 days deviation, either in percentage, either in days. I am just keep it as empty both side. Go to back, select new entries, enter TC credit control area TTCA, then select the risk category B, medium risk, and here you can select the credit group which we created, credit group for delivery 02. So here medium risk, our company code TT06 for reference, save, select item check, warning and status block, and then save the data. Then select next entry, credit control area TTCA, and the risk category which we created C. C means low risk. So then here you can select the credit group for goods issue So then here you can enter low risk, our company code TT06 for reference. Select item check. So reaction it is A means warning, and status block, and then save the automatic control. So then go to back, select position, enter TTCA. So now we created 3 automatic control. If the risk is high, then system will block at sales order level. If risk is medium, system will block at delivery document level. If risk is low, system will block at goods issue level. So then go to back. Step number 14, create new customer and update credit profiles. So go to SAP. First we need to verify the configurations. /n SPRO, enter SAP reference IMG. Go to cross application components. Under the cross application components, go to SAP business partner, basic settings, business partner roles, define BP role groupings, execute. So double click on BP role groupings, select position, enter TT. So here BP role customer TT06. Double click on BP role groupings and BP roles. Here there is no credit management available. Select new entries, and here you can select the BP role, business partner role, UKM000 SAP credit management. Enter and save the data. Continue. So now the SAP credit management business partner role has been included. Now we can create new customer. Go to /nbp, enter, go to organization, select the business partner grouping, and select the business partner, create in BP role TT89. So then under the general data, select title as the company. So here name, I am going to enter customer 2. In real time we can enter our original customer name. Now I am just name it customer 1, our company code to T06 for reference. So then scroll down, you can enter the sample address. In real time we can enter our original client address. So state number, state name, house number, postal code, city Chennai. So then the country IN India. So then the region is nothing but state 33 Tamil Nadu. Scroll down, here you can select the language English. So then the remaining field are optional, we will update in real time project. So now this is enough for practice. So then go to company code tab, enter TT06 or company code ID, Tata Motors Limited, enter, select the reconciliation account 120000. So then go to sales and distribution, select sales area, enter TTS1 sales organization and distribution channel T0, then division T6, select transfer. So here you need to enter the sales district TTSD and the sales office you can select. There are 2 sales office, I am going to select TTS1 Chennai. Sales group I am going to select TT2. So then enter, scroll down. Here we need to enter the price group 01 and the customer pricing procedure 1 standard. Scroll down, then go to shipping tab. In shipping, here you can enter delivery plant TTP2, shipping conditions 01 standard. Scroll down, go to billing tab. So here you can enter the Incoterms, CFR, cost and freight, Incoterm locations Chennai. So then payment terms 0001. This payment terms created by finance. I am selecting standard now. So account assessment group for customer 01 domestic revenue. So I am going to enter 0 for tax code. 0 means exemption. So in real time project, the tax code updated by finance consultant, they can create the tax code. So now I am going to enter 0 for all the tax code, which means there is no tax exemption. So then go to partner function. So here you can select the 4 partner functions: sold to party, bill to party, payer, and ship to party. So then go to general data. So here select credit profile. So the first one, rules. Here we need to select standard rule without automatic calculation, and here if you want you can enter the score, but here we need to enter the validity up to date. So let's say I am going to enter May 31st the validity. And risk class, here you can select our risk class which we created. So there are 3 risk class. I am going to select TT1 high risk and check rule. So B1 credit limit only dynamic. So then select credit group small medium customers. So then go to credit segment data. Here you can select the credit segment which we created already, TTCS. So then here you can update limit. Let's say I am going to enter 100,000 INR. So then validity up to date. So then save the data. So now the business partner has been created 5510012. So the customer and the business partner both are same number. So now the step number 14, new customer created and updated credit profile. So now next one we can go for creating the sales order to verify the credit limits. The next step we can go to create sales order and check the credit limit for high risk. Go to SAP, enter the T code to create the sales order /n VA01, enter. So here we need to enter the order type or the standard order, then sales organization TTS1, distribution channel T0, division T6. So then enter. Here we can select the sold to party. Sold to party is nothing but customer. So here I am going to select my customer which we created now. So then enter the customer reference which is nothing but the customer purchase order. So then customer reference date, purchase order date, payment terms 0001, Incoterms CFR, Incoterm locations Chennai. So then select the material, enter order quantity 5 number. So then go to enter the plant TTP2, enter. System will throw the error, entry TTCA TT1 does not exist in table T691A, check entry. So TTCA is nothing but credit control area, TT1 is risk class. So go to the configurations, select new entries. Here you can enter the risk category TT1, credit control area TTCA, and the name high risk. So then TT2 TTCA medium risk, TT3 TTCA low risk, and then save the data. So now go to back, go to sales order screen, enter. Now pricing procedure could be determined. So we can assign the pricing procedure. Go to parallel screen, /n SPRO, SAP reference IMG, sales and distribution. So then go to basic functions, pricing, pricing control, define and assign pricing procedure, execute, set pricing procedure determination, select position, enter the sales organization, TTS1. So here the customer pricing procedure is TT, it is not 1, actually it is TT. Go to slash and BP, select our customer and double click. So go to sales and distribution and change the display to edit mode. So here you can select the customer pricing procedure TT and save the customer master. So then go to sales order, enter. So now again go to VA01, enter all the details, select the material, order quantity, 5 number, enter the plant TTP2, enter, save the sales order, standard order 6593 has been saved. Next we need to create delivery document slash and VL01, enter, select the shipping point TTS1, sales order delivery date and the order number 6593, enter, just to save the document. So now the outbound delivery 80005314 has been saved. So then go to picking request slash and VL02, enter, select picking, enter the picking quantity 5 number. So then post goods issue, before that enter the storage locations TTS5. So then post goods issue, the picking has been confirmed, post goods issue has been saved. Then create the sales invoice slash and VF01, enter. This is my delivery number, just to save, it's a warning, enter. Document 90005313 has been saved. This is my invoice number. So let me check the document released to accounting or not. Go to VF02, select the flag, document has already been posted on to accounting. So now the invoice is created. So let me show you. Go to slash and BP, I'm going to show you the credit value. Here you can select the customer, enter, double click, go to credit segment data. So credit exposure 40,000, the value is 1 lakh, the 40,000 already posted, so remaining we have 60,000. So I'm going to create one more sales order slash n VA01, enter all the details, order quantity 5 numbers, plant TTP2. So then go to sales document, create delivery, standard order 6594 has been saved. So go to picking, here you can enter the picking quantity 5 numbers. So then storage locations TTS5, post goods issue. So the post goods issue has been confirmed, delivery number 80005315 has been saved. Sales order created and parallelly delivery document also created, post goods issue has been confirmed. So then now let me go to slash and BP, select the customer. So here you can see total value is 80,000. Go to display the liability. There are two documents, one is open invoice, the value of 40,000, another one is open delivery 40,000. Total document value is 80,000. So now we have remaining 20,000 credit limit. To create one more sales order, enter all the details. So then order quantity 5 number, enter the plant. So then save, standard order 6595 has been saved. Check the customer details. So system allowed 1,20,000 but our target value is 1 lakh. It has some error. To verify the error, go to configuration, So here define automatic credit control, select position, enter the credit control area TTCA. So here high risk, the risk category, we assigned the wrong risk category instead of TT1, so here it is A, that is the reason. So select position, I am going to delete this 3 line item. Save the data. So then select new entry, enter credit control area TTCA, risk category TT1, and so here we need to block at sales order level, high risk, select item check, SAP credit management. Here I am going to select D, so value which the credit limit has been exceeded. So then save the data, like B plus value by which credit limit has been exceeded, which means system will send the error message and how much value has been exceeded. So now after changing the configurations, so we can enter the 3 levels. Second level medium, 02 means at a delivery level, medium risk. Then save the data. Third condition, TT3, so at post goods issue level for low risk. System will block the document at post goods issue level for low risk. Save the data. So now the right kind of risk category has been linked. This risk category linked with our customer master. So go to back. So here I am going to change the risk category. So here I am going to enter the limit. Two lakh, change the limit and then save the customer. So now 1.2 lakh has been posted already. Remaining we have 80,000. So I am going to create one more sales order. Order quantity 12 number. So then enter the plant. So then see here system will throw the error, check credit check SAP credit management failed, unable to save. So credit segment TTCS of partner 55100012, credit limit 0 INR has been exceeded by 1,20,000 INR in the horizon. So just continue, try to save. So you can see the error message. So now we cannot create the sales order. First line item high risk has been verified. Now we can go for second level medium risk. To verify the medium risk, we need to create one more new customer. So go to /nbp, select organization. Here you can select the grouping and select the business partner. So then you can enter all the details. So here I am selecting risk class TT2 medium risk. Limit 1 lakh. Then save the customer. So now the third customer has been created. So we can go for creating the sales order /n VA01. Enter all the details. Order quantity fine number. Enter. Go to header data sales document. Select delivery. Standard order 6596 has been created. Picking quantity fine number. Storage locations TTS5. So then post goods issue. So the delivery has been created. So then go to VL02. Enter. Picking 5 number. Storage location. Post goods issue. Go to VF01 to create invoice. Save. Just a warning. Enter. The document has been created. So now go to /n BP. Verify the details. Open invoice for 40,000. So target value is 2 lakh. So I'm going to create one more order. VA01. Enter all the details. Create delivery. So picking quantity 15 number. Storage location TTS5. Post goods issue. So now go to refresh customer credit limit. So totally 1,60,000 has been posted. Remaining we have only 40,000. Open invoice 40,000. Open order 1,20,000. So then go for one more order VA01. Enter. Save the order. Order has been created. Go to create delivery. Enter order number, delivery date, then shipping point. Enter. Save. System will throw the error message. Credit check SAP credit management failed. So go to /n BP. Enter the customer, second customer which we created. Double click. So in order level 2,40,000. Open order. Order level accepted the system, and the delivery level system will throw the error message. But the order level system will accept up to 2,40,000. More than limit system will allow at order level, but delivery level system won't allow. So now second condition also verified, medium risk. Now the third condition, we need to verify the low risk. We can go to new customer /n BP. Enter all the details. Now I am selecting TT3 low risk and credit limit with check only dynamic. Credit group small and medium customers. Select the credit segment TTCS and update the limit 50,000. Save the customer. So now the new customer has been created. I'm going to create new sales order /NVA01. Enter all the details. Sales order has been created for 5 numbers, the value of 40,000. Then we can create delivery. Delivery has been created. Now we can go for post goods issue. Goods issue has been completed. Now we can go to /NBP to verify the credit check. Select the customer, enter, double click. So here you can see under the credit segment data, total value, target value 50,000, already 40,000 accepted. I'm going to create one more sales order. Sales order and a delivery has been created. So now we can go for VL02 post goods issue. So now system will block the post goods issue. Select post goods issue. Credit check SAP credit management failed. So now let's go to /NBP to verify the conditions. Enter the customer. So here sales order level target is 50,000, actual 56,000. Delivery also accepted. Post goods issue, system will throw the error. System won't allow for post goods issue. So in this entire credit management configurations, we saw about 3 different conditions. Sales order blocked for high risk customer and delivery document blocked at medium level customer and post goods issue blocked for low risk customer. Go to financial, supply chain management and credit management. Integration with accounts receivable accounting and sales and distribution. Integration with the sales and distribution. Define automatic credit control. Select position, enter TTCA. So there are 3 conditions we created. First one is the risk category TT1, high risk. System will block at 01. 01 means sales order level. So then risk category TT2, medium risk. System will block at delivery document level for medium level customer. Low level customer, system will block at 03, post goods issue level. The risk category TT3. So now all the 3 conditions verified. We created 3 different customer assigned with the 3 different risk category, and we are creating the order, sales order, delivery document and invoices to verify the credit limits. So all the 3 credit limits working well, high risk, medium risk, low risk. So now the entire credit management chapter has been completed. Thank you.